Welcome to Drill Down Earnings. We have quarterly results out from Workday. This is the end of their fourth fiscal quarter for the 2025 fiscal year, ended in January. I'm the Chief Market Strategist for Cory Johnson with Epistrophy Capital Research. We cover the 50 most important companies in technology. Workday, certainly one of them. These earnings were a little bit better than Wall Street expected, whatever. It's more about Wall Street than it is this company. But $210 million in revenues, pretty good for this company and very profitable, or at least profitable again, which is, different than what this company has given us in the past. This is a new Workday. Revenue growth was good at 15%, but slowing. It has kind of steadily been slowing over the last few years. Although we saw a little bit of a tick up this time last year, no, just 15% revenue growth in the top line. And profitability. Workday making operating profits again now, 7 quarters in a row. This company has lost money for a very long time. It's a new day at Workday. It's no day at Workday for a lot of people because the company announced a restructuring and some layoffs at the end of January and taking a slight charge in this quarter as a result of that. Also, Workday's a different company that was in the past when it was really purely focused on HR, and then it was HR and finance. Now there's a lot of new things happening at Workday, not least of which artificial intelligence and agentic AI, that is agents, AI agents that do your work for you. Yeah, that's the dream at Workday. And they're actually selling this stuff, and you can see it in the results, and you can see it in the backlog figures. When the backlog figures hit the tape, the stock went straight up in after-hours trading, trading up significantly. When I look at it at this moment, it's up 12% in after-hours trading, which is pretty good given the fact that the stock has declined 17% in a year, although it's made up a lot of ground since a real big fall last June. So, as I mentioned, that backlog spiking 13% is really impressive for this company because obviously that bodes for future sales for this company, and it shows that their new products, like their AI products, are actually working in the marketplace. In particular, they talked about certain products out there that are actually taking hold, things like agentic AI products. The recruiter agent, which is of course helping HR departments find the right resumes and even start part of the process of doing an interview using AI. Extend Pro also doing quite well for this company. So when asked about how to characterize the backlog and what it tells us about the products, CEO Carl Eschenbach, I said in English, CEO Carl Eschenbach really talked about how this AI layering in of AI services is adding to the future sales for Workday.
We do have good visibility for the next many years on the renewal opportunity we have here at Workday. That being said, as you know, we do not wait for the renewal opportunity to sell back into our customer base. For example, we highlighted again for the second consecutive quarter that we were able to sell an AI SKU back into our customer base, more than 30% of those transactions, which is, the second quarter in a row. And specifically, the uptake we're seeing on our recruiter agent and Extend Pro allow us to sell back into that customer base. Both of them almost doubled quarter over quarter. So we have great visibility in our existing customer base, the renewals, but more importantly, Cash, as we've been doing the last couple of years, we're not waiting for renewal to sell back into the customer base, the products and SKUs we have today. We also know that we have a number of new AI agent SKUs that we'll be rolling out over the next 6 to 12 months, and they also give us a great opportunity to sell back into that customer base. So we're excited about the customer base.
So new stuff to sell, it turns out, newsflash, is really good for any company, including Workday, as they go back to their original clients who were already liking their stuff and buying their stuff. Something new has been good for them in terms of building backlog, good for the company. But what's it all mean? What's your drill down earnings takeaway? And what's the drill down earnings bite? The one number that tells us a whole lot? Well, revenue, $2.21 billion in the fourth fiscal quarter, in the fourth quarter of 2025 for this company, and nice earnings per share growth, but revenue growth at only 15%, a little bit lighter than it's been in recent years. But the move, some of the things that really affected the company and affecting the stock, layoffs certainly top of mind for this company, a big change of the culture at Workday, and the move beyond HR, beyond finance, into agentic AI. AI agents that do the work for you is boosting sales of Recruiter Agent. It's boosting sales of Extend Pro, and it's boosting the bookings for this company. That leads us to the drill down earnings bite, the one number that tells us a whole lot. Near-term bookings, 12-month backlog, up 9% for this company. That's very strong for Workday and bodes well for the near future and the distant future as well. All right, thanks for checking out Drill Down Earnings. I'm Cory Johnson.